Hey guys, it's your girl Sunny D, 1/3 of the podcast, GFT Radio Show.
What up, though? It's your boy Willie Styles from the GFT Radio Show. Just letting you know you can catch us every Monday night, 10 p.m. Eastern.
And to get some merch, I got some on right now. Go to teespring.com/stores/GFT Radio.
Grown Folk Talk Radio. Join the conversation. Let's have some fun. Holla.
What up, though? It's your boy Willie Styles in the building, and welcome to GFT Radio Show. It's a Money Matters Monday, so welcome to the show. And I'm going to make sure I give credit where credit is due. The title of the show came from Marlon last time you were on, so definitely shout out to you for that. You guys want to say hello?
Hello, everybody.
Hey, what's going on, family? Good to see y'all. Be with y'all one more time.
No doubt, no doubt. Well, you guys are joining us on GFT Radio Show. And as always, it's usually on a Monday night. So Monday at 10 p.m., we're here every Monday. And today is September 21st, 2020. So we're getting a little further in. Is today the first day of fall? Is that how that works? I think it is. I want to say it either today or yesterday was. I can't remember how that was.
It's cold.
Yeah, I know, right? Oh,
it's here, whether we're ready or not, it's here.
Yes. It's been feeling like fall for the last week, so or winter, depending on what part of the state you're in. So no doubt. So definitely saying a sad goodbye to summer, and but it's the cycle of life, right?
Yep, that's how it's all over.
Right.
Here comes hoodies, sweatshirts, and all that good stuff. Sweaters, right. Fall fashion. Here we go. Layer it up.
No doubt. If you can't watch the show, or if you come in late, definitely check us out on demand, free 24/7. Audio playback is on Spotify, iHeartRadio, Stitcher, Google Play Music, Apple. I keep wanting to say iTunes, Podcast, SoundCloud, and Blog Talk Radio, or you can always watch the video replays on Facebook and YouTube. So definitely check that out. And as always, get our merch. We got t-shirts, sweatshirts, masks. We got fanny packs. Teespring.com/store/GFT Radio. Get your merchandise. Support us while we support you. So tonight's show is Money Matters Monday, and we have Ro Jones on. Welcome, Ro. She is our credit expert that's going to talk about why credit is power. That was my title I came up with. I came up with the subtitle. I slid in with the extra there. So
yeah.
As always, I like to yield the floor to our guests. So I want to start with Marlon first, then I'm going to go into your introduction, Ro. So Marlon, if you want to introduce yourself, please.
Sure. Allow me to introduce myself. Oh man. Hey, listen. Oh man, I'm taking me back for a minute there. But anyway, listen, my name is Marlon Johnson, and my area of expertise is life insurance. September is Life Insurance Awareness Month. This is the time to think about protecting your family just in case something happens to you. The greatest love letter you can give is honestly in the form of a check that helps to take care of the needs of your family. God forbid something happened to you. So I just want to encourage you. Before at the end, I'm sure good friend Willie will have our contact information. You got questions or anything like that, love to answer them, love to help you. That's what I'm here for. But today we got a special guest. We got a special guest. I brought a partner because there's some that her area of expertise ties into mine. So I'm gonna yield on to her.
Oh my goodness! Like right back at you, man. I'm honored to be on the show. I'm Ro Jones. I happen to be Marlon's client.
Oh, nice. Okay.
So, I'm actually his client. And what I basically do is help people improve their credit and their finances. Credit is the key part of what most people come seek me out, but we also do cover wills, trusts, and power of attorneys and health over your health and your estate. We also help people, begin to pay down debt, because your credit actually, I want to make that real clear. Credit and debt are not the same things, y'all.
Mm. Good point. Uh-oh. Did we lose her?
I think we might have a little bit of a freeze. Sound like she was getting ready to explain the credit and
She was
debt.
about to give us the meaning of life. And
but yeah, about to drop some of them nuggets in them jewels.
right.
Okay, here we go. That looked like that connection coming right back. Because we want people to get free.
I don't know if hopefully she realized she got dropped. Hopefully. Okay. Sorry, y'all. We're having a little technical difficulty. We're going to get Ro right back in here. She's going to explain to y'all where did my messages go? While she's away, what I will say is that going back to what you were saying about that earlier, Marlon, in terms of the importance of leaving that gift, right? Is insurance is definitely something that shouldn't be a second thought. It shouldn't be a second thought. It shouldn't be something that people think about at the last minute. Especially you don't want to be sick and sickly when it's time to get life insurance.
Because the truth is, here's a question that people ask me all the time: should I wait? And the answer is absolutely not, because you got two things working against you. Age, because the older you are when you apply, the premium's going to cost more. Why? Because there's more of a risk of the company that's covering you.
Right.
And really, insurance is nothing more than transferring the risk off of you onto somebody else. When you buy a car, the finance company, the reason the finance company wants you to have insurance, they don't want the risk that something happened to the car and they can't get paid.
True.
When you buy the cell phone, what's the first thing the person try to sell you?
Insurance.
Because guess what? All the carriers, they don't want you to drop that phone, and we didn't buy it in a super expensive OtterBox case that was like $200.
Exactly.
We dropped the phone, and then they don't want to say, well, hey, guess what? I'm just not paying them no more. And these days, when the devices are so expensive, they don't want to get stuck with the risk of, man, what could happen? So if they get the concept, and a phone and a car, or even when you go for the mortgage company, even if you got the down payment, even if you got the financing, if you can't come up with the money for the insurance, guess what they ain't giving you? No keys.
No keys. Exactly.
And the truth of the matter is, you say, well, wait a minute. Homeowners insurance for a premium for a year costs more than life insurance.
Yeah, that's true. Right.
Auto insurance for a premium typically, especially if you're living in the D,
right.
Especially if you're living in the D, guess what? That costs more than people's premium for life insurance. And so the question, when people ask, should I wait? No, I shouldn't wait, because it's extremely important. It's extremely reasonable, and it's covering something that can't even be replaced.
True that.
Okay, welcome back.
Welcome back, Ro. Back.
We've been going down all day. It's too many devices. I don't care how.
Yeah.
That's every parent right now.
Exactly.
It's by myself.
those first world struggles.
Yes, sir.
All right. Well, let's get back to what you were saying, Ro, about the difference between credit and debt, and I can't remember what else you were saying, but
That's what I'm talking about.
Yeah.
I was talking about the difference between credit and debt. So, yes, your credit report actually reflects debt, but when you're trying to repair your credit, it's not necessarily that you are actually going to take care of debt per se. You're going to have to obviously bring, like, if we're talking about credit cards, then yes, you need to bring those credit cards down. But oftentimes, people instantly try and say, well, I want to fix my credit by, going into bankruptcy. Bankruptcy was going to fix the debt, but it's not going to fix the credit, because they're two different things. They're two different avenues. Bankruptcy is specifically for debt. But let's think about for a second what bankruptcy does. Bankruptcy actually gets you out of agreements, out of covenants. So the moment that you file bankruptcy, you're literally telling all of your creditors, I don't keep my agreements.
Woo.
Right.
I break covenant.
Woo.
Mm-hmm.
Right. So that gives them now the right to charge you all this extra interest because you filed bankruptcy. So technically what you're doing is obliterating your credit, because credit has to do with, is your name good enough for me to actually lend you money? Is your name worth me actually giving you money? And can I expect for you to actually keep the covenant or the agreement that you just made with me?
That's always been a crazy thing to me. And everybody, welcome to the show, Smooth. What up, brother?
What's going on?
Welcome back. Welcome home.
I'm glad to be back. Y'all can hear me good?
Yeah, it's a little muffled, but it's clear.
Okay. My headphones. Yeah, thanks for the feedback. Glad for having me back. You know what I mean? And I'm glad to be back on this show to get this financial advice.
Yes.
You know what I mean?
No doubt. All right. Yeah, what I was going to say is that I feel like what's crazy to me about the higher interest rates that you may get, and that the higher fees that you may get and that kind of thing, is always crazy to me, because it's like you already have trouble paying things, but we're going to penalize you more by making you pay more for the thing that you need in life or that you want in life. And but it's that penalty that we want to avoid, right?
That is the penalty that you want. Absolutely, because you're now paying twice as much, 3 times as much for what you could have originally get without having to do all of that. You know what I'm saying? So having good credit right there. I always tell people off top, especially when we're doing credit restoration. I run into some people, I can't afford to do credit restoration. You can't afford not to. You got money, it's just going in the wrong direction, right? Because if you got poor credit, guess what you're paying extra money for? You're paying extra money for water. You're paying extra money for DTE if you're in Michigan. You're paying extra money for rent because you're gonna have to put a deposit down. So you can't tell me you don't got money. You got money. It's just going somewhere else.
True.
So you can actually keep all that money if you actually fix your credit.
Yeah. I recently improved my credit, and it was like by, I want to say, over the last year, a little over 100 points.
Awesome.
And for me that was huge, but I also looked at what I was doing during that time, right? Paying off debt, but also making payments that showed my ability to make payments, but also keeping good credit balances, not totally obliterating. Because I at one point I paid off a whole credit card, and of course I paid for that when my credit score went down. That's something I definitely want you to talk about. Sometimes even doing the right thing can be the wrong thing for your credit score. Not to say that it's bad to pay it off, but just how that affects you, because some people don't understand that side of it either, is how the activities that you do affect your credit and your credit score.
That's awesome that you just asked. I just literally got finished doing a Zoom call, and that was one of the questions, like, why is it that when you pay off accounts, your score drops? Well, length of credit counts for 15% of your score, and length of credit is the hardest area of your credit score to tap into. You need time. So when we start closing out accounts, let's talk about the credit card. So say you close the credit card, you pay the thing down, right? Score goes up because you pay it down. Then you close it out because you're not using it no more. Guess what you got to lose? Credit card utilization. So say you got a total amount of 50 grand in credit across, let's say 5 cards. So they all 10 grand each. Well, you close one card out because you're not using it no more. You just dropped your whole totality down to 40 grand. So if those cars are all over 30%, guess what? Now the total amount of credit card utilization is about to go up because you closed out one.
Mm-hmm.
So now you're about to take it plumbing.
Right.
But not to mention, now, while even though closing the account doesn't necessarily mean the item is about to get removed from the report, it's not. It's going to be there for 7 years unless you dispute it. But the activity stops.
Mm-hmm. Yeah.
The activity stops, right? And that utilization goes away. That's what causes your drop. So we never want to close accounts, you guys. 15% of the score has to do with you building long-term credit history. A healthy credit report has at least 7 years on it.
Mm-hmm.
Right. So the one thing you don't want to do is go close your 7-year account.
Right. Yeah. Especially not that 20-year account.
You don't want to close none of those. Keep those open. You know what I mean? Because that's giving you weight. You know, those accounts are important because you've got history there. That's what the lenders are looking for when you're trying to buy a home. Your score can get you approved, but it's the pre-approved. But it is the health of the credit report that actually gets you to the closing table. Right? You know, when you buy your house, you'll get that pre-approval. I'm sorry, y'all. I sound like a whole man. I've been singing the whole weekend. I don't have much of a voice. You get your pre-approval and you get ready to go up under underwriting, and all of a sudden you got this laundry list of things to do. Like, wait. That's because the health of the report isn't sufficient enough for the underwriter to actually substantiate actually giving you this loan.
Okay.
So they're going to actually have you pay down credit cards and offer it. If anybody's on here trying to buy a home, let me go ahead and tell you now, if you don't got no credit cards, go get them now. You need credit cards. You need trade lines on the report, actively reporting to actually get approved for a mortgage, right?
Can you explain what a trade line is so that people understand?
So a trade line is basically an account that you have opened up, and typically it's going to be like, it could be a credit card, it can be it could be a furniture account. Those are all. It could be a credit builder account. SELF, SELF.INC. Write that down. SELF is a credit builder account. It's $9 to start it. You can do the $500 plan. $25 a month. You guys, your score will go up 20 to 60 points just by adding that installment plan. It's basically a loan in reverse, right? So the first plan is for $500. So you're going to make $25 payments every month till you get to the $500. Once you got to the $500, then they deposit that money into your account. That's your money. You get a little interest. It ain't nothing to run home and tell your mom about. It's about $19 to $20. But every time you make those payments, it's hitting your reports, all three, boosting the score up. So literally within the first 30 to 60 days of you starting that account, it's going to boost your credit score. Now, if you actually don't have credit cards, once you get to the $100 and you got at least 3 consecutive payments, Self will offer you a secure card. Which, now remember, I told you, you get your money back. So if you take the secure card, it's going to deduct the money out of that savings account. So if $500 is the plan and you put $200 on that secure card, you're not getting $500 back.
Okay.
Because the other $200 you have, it's just on the card. So then say that again.
I wanted to ask her about secured credit cards. Her opinion. No, that was actually my first question about those who say credit score was horrible, and then they finally start getting offers, and some of them are secured credit cards. I mean, you basically answered it as like those are something good to start off with for those who have poor credit.
Absolutely. You know, I like secure credit cards because we typically don't like to waste our money.
Mm-hmm. Yeah.
And a secure card requires you to become the grantor of the card. You're actually putting $200 to $2,000 on a secure card. Now, if you're going to go get a secure card because you put money on it, make sure it's a low APR. Nobody wants to pay interest on their own money.
No, not at all. Not at all.
All right. So First Progress Bank is a company that I do have a contract with, so I can help people get into that. no credit check. So you don't take that inquiry. But the idea of having a secure card, you don't want to pay 25% on your own money. You know what I mean? So look for a low APR. Now, this is why I like secure cards, because when people need to restart their credit or actually start building credit, i.e. my son, you have him in a secure card, I need to train him on how to use the card. So if you put 200 on that card, 30% of that is really $60. So I need him to understand, yes, 200 is available, but once you cross 600, that score is going to drop. So I need him to be trained to say, I don't have a $200 card, I got a $60 card. So that he learns how to manage his utilization appropriately, and he gets accustomed to not thinking he has all this money available. He only has this portion, and he has to manage that portion to protect his credit score. So in that I love secure cards, because for the person who is telling me they're scared of credit cards, it's not the card that you're scared of, it's your discipline.
Yeah, true.
Ain't nothing wrong with the card. The card is fine. You can't tell your.
So that was my problem. That was my problem when I was young. 18. I said that was my problem when I first got my credit card when I was like 18 years old. I didn't understand that when I got that $200, I didn't really have $200 on that credit card. You know what I mean? That I should keep it at. I shouldn't go below 60. Like that's $60. Like that's a good point. I didn't understand that because I was older. You know what I mean? I went straight and charged the whole $200. You know what I mean? And that can kill my credit score. You know what I mean? So
that's the part that we have to educate on, because we get credit cards to build credit. But what happens is we get the credit card and we go max it out, and we didn't tow the credit up all over again trying to rebuild it.
Right.
So
been there.
Educate. You got to educate the person on, like, if you got $1,000 car, you really only got $300 to spend. You see what I'm saying? $10,000 car, you only got $3,000 to spend. Now, obviously, you have the full utilization. I want to make that clear. You do have it, but understand, if we're talking about for the purposes of building good credit, then you don't go past 30%. Now, say life happens, because life is gonna happen. Period. Right? Life gonna happen, and you're gonna have to use it. At some point, you might have to max the card. That's where you need to know your reporting date. Because if you know when the card reports, as long as you get it paid back down below 30%, it'd be like you never used it.
Oh, right, exactly.
Yeah.
Yeah, and all you can do is you can go right into your credit report. It'll literally tell you the day that is actually reported. So we also need to get into a habit of paying before it reports, not on the actual due date. Because sometimes the due date is after the reporting date.
Exactly.
So it's before time.
I actually have a card, I believe, that's 4 days. It's either 4 days or 5 days before the due date. There's the reporting date. Which is weird to me. It's so weird.
Yeah. So we get in the habit of knowing when our reporting dates are, and actually you want to pay at least 3 days before the reporting date, because you want to give it time to clear. Right? Because usually if you're paying a credit card, you ain't paying by a debit. You usually gonna pay by ACH. So you want to give it some time to clear, and then that way your reporting is always below 30% versus paying on the due date and then risking the chance of it reporting the balance before the payment actually hit. So credit cards are a really great way to leverage your credit. That's how people are making money. Our problem is we just don't we haven't been exposed to other ways how to use our credit. We can have credit cards and use them to go buy properties versus food.
Yep.
You see what I'm saying? So now your money your credit is making you money versus making you fat.
You're right. True that. Right.
There's other alternatives, other real realities. You know what I mean? I was sharing with a young girl that there is a different reality than walking on a lot and actually being ran through every broker known to man. The other reality is that they drive up to your house with the car and have you sign at your door because you got. There's other realities, but if we're not exposed to those other realities, we don't know.
Right.
Right. Absolutely.
So you talked about what helps your credit. There's an item that I always think about that I hear people say, I'm going to go buy this because it's going to help my credit.
Okay.
Can you tell us some things that people shouldn't go run out and buy just because somebody is selling them something that they claim is going to help their credit? Can you tell some folks some things they shouldn't be rushing out to buy, thinking it's going to improve their credit?
Cars.
Thank you.
Yes, thank you.
We're on the same page. That's my pet peeve. I hate hearing people. Like, as soon as I hear somebody, I literally want to slap them. Like, no, don't listen to that salesman. He's trying to sell you that car. He's not trying to sell you good credit. He's not trying to give you a boost in your equity. He's trying to sell you a car. So don't think that's going to improve your credit.
Let's think about this for 1 second. I mean, nothing's wrong with financing a vehicle. You know what I mean? If you got the credit for it, there's nothing wrong with financing a vehicle. I'm just not one of those persons. Paying car notes is overrated to me. But let's think about this for a second. Whenever you see the advertisement of no credit needed, you automatically know that the APR gonna be high.
Yeah.
That's why
Off the charts.
Right? Let's think about that. Anytime you try and get your car fixed and they had a no credit needed option, you about to pay 138%.
Yes.
So that's why that's not a care. That's not somebody that actually cared and see what I see. And the reason why I'm saying car, because again, I want to make that very clear. Buying a car is not always a bad thing by financing it if you have good credit. It's if you're trying to build good credit with buying a car, guess what's going to happen? You're going to buy something you don't want, which 9 times out of 10 won't outlive the term of the loan.
Oh, talk about it. Talk about it.
Exactly.
And unfortunately, you have good intentions on trying to build good credit, but that car gonna frustrate you, and then you're gonna abandon the car. And guess what? You guys, I don't care if you return a car, that's still a voluntary repo. It's still a repo. A repo is a repo is a repo is a repo. Okay?
Right.
And you are going to be held responsible for the rest of that loan.
Yeah,
but it didn't work out.
That's a huge point. My other issue too, from what I know about how car loans work, is reporting. And I think I've had, Damon can probably back me up on this. I've had at least 9 cars in the last 15 years. And of all those cars, I think I had maybe 2 that I didn't have a payment on, but the rest I made payments on. And no matter who I got the money from, whoever let me the money, no matter if it was a bank, if it was a credit union, if it was one of those loan sharks, whatever it was, I never had a car loan consistently report to my credit. It was like every other month. One was really good. I thought every other month was good. I had one that literally only reported like 3 times in a 2-year period.
Wow.
3 times. And you got to think, if you're late, you know they're going to report that immediately.
Of course.
1 minute late, they're going to report that immediately. But to report my good standing payments 3 times in 2 years, that's sad. It doesn't do anything to improve my credit.
Let's talk about this. Okay, you just brought up a very good point here that most people do not understand about credit reporting. Now, you have the right to ask before you start trying to get credit from a particular person or a vendor or establishment. Do you report to all 3? Not all banks report to all 3.
That's another.
Not all credit. Majority of credit unions don't report to all 3. And not all dealerships or wherever you're buying your cars from are going to report. Let me tell you why. Because there's no law that says anything has to report. They pay to report.
Yes.
They pay. This is big business. They're in the business of selling your information to the credit bureaus. They pay to report your information. That's the reason why your credit scores can be, 700 on TransUnion, 682 on Equifax, 635 on Experian. And usually Experian is the shorter because it's the bougiest of them all. And that's where usually banks are, right? Banks are usually going to pull Experian. If you're renting, it's usually going to be Equifax. Cars pull TransUnion. The small mom and pop shop cannot afford to report to all three. The big corporations like Beaumont Hospital, you better believe Beaumont gonna report to all three.
Yeah, no doubt.
There's a default, it's gonna show up. Verizon Wireless, AT&T, these are, major corporations. Yes, they can afford. But also, let's think about this. What doesn't show up on your report?
Rent.
Utilities do not show up on the report.
Yep.
Only if you happen to use the Experian Boost will it show up.
Mm-hmm.
But typically, utilities are not reported until you default. Now, don't pay DTE. I think it's Harrison Collection or Law. That's gonna show up real fast. Okay.
Exactly. And that's the one thing is like looking at most of the places that either don't show up or don't report, but they will report when you mess up.
Yeah.
That's the sad part, or that's the crazy part about it. When you got to think about is that you're not going to build anything, but you will lose if you mess up.
Absolutely. That's their shame on you. Didn't keep your agreement with us. That's that little pat on the hand. So that's why your scores can look totally different. But that is also why the Fair Credit Reporting Act was created. Because if they're paying to report, who's going to fact check the fact checkers? Who's going to make sure that what you are reporting is correct? Who's going to make sure that the information that you are sending on my report that can stop me from getting a home, stop me from getting a car, stop me from getting a job, is actually accurate and should be on my report? That's what the Fair Credit Reporting Act is for. So you have the absolute right. Everybody hear me. You have the absolute right, regardless if you have paid it or not. If it is negatively impacting your score, you have the right to dispute any negative item on the report because they pay to report the information. And you need to think about this. Currently, I'm sitting in front of about 3 computers right now. And y'all see I got nails, right? One missing. Now, say I'm on the phone and I'm keying and I miss a key. That happens every day. Y'all seem to think that your collectors and the people who you talk to when you call customer service are 100% accurate all the time. They are not. No. Sally has issues with John at home and comes to work pissed sometimes. Okay. And let's not forget with your bankruptcies, you guys, we seem to think that our bankruptcies are 100% accurate. Again, Sally has come to work and she is not about to file all your information. Her and John been fighting all night. She tired. All right. Something's going to get messed up. So you have the right to dispute anything negatively impacting your credit score. Errors happen because we're human. You just need to make sure that because somebody was human, it's not going to stop you getting in your house, in your car, and getting a job.
Right. Job, right. Some of us do get good. I know every job I've ever had, I've had to do a credit report.
Yeah, and that's becoming more frequent now. Now I am seeing promotions being determined based off of credit reports. Especially like in the DC area, because majority of those jobs are government jobs there. Right. So obviously that would be what you would run into. But even down to the casino, before Toys R Us closed, we had a nurse. I had a nurse who was trying to get a $9 an hour job. Mind you, she has an MSN. Credit was poor, and they would not give her the job because of her credit. Because she's cash handling.
Wow.
So, and it doesn't seem fair. It really does not seem fair, but you guys, your credit can actually mess up your livelihood. So we have to take it a little bit more serious. I don't know if y'all paying attention. You walking up in these stores now. Cash is, some stores ain't taking cash.
Right.
That's right.
True. Yeah, that's true.
So we better take it a little bit more serious than what we have before. Credit is it's becoming more important by the day. You know, you can save some massive money. So let me tell you one other thing that you can do. Say your credit utilization overall is a problem because of one card. Like I just had a conversation with my father. A care credit. Let's talk about that. Care credit is something, you know, we typically tell everybody, you know, keep your cards below 30%. Well, when you got care credit, obviously it's going to be surgery.
Yeah.
Right? It's kind of hard to keep that under 30%, right? Because whatever the amount you have to do for this particular surgery or whatever it is medically you're going to do, you got to do it. Every other card, it could be controlled. Care credit is one of those ones that can't be. Right. So in this case, my father had a care credit card, and he was just a little bit over his 30% area. Right. And I'm like, Dad, we got to get that down so we can go ahead and creep back up into, you know, the score that he had. So all we literally did was call every last one of the other credit card lenders and ask them to increase his scores because he has amazing payment history and because he's never been late.
Increase his limit.
Increase the limit. And they all were increased without even pulling the credit score. All right. So they didn't pull the report. They said, Mr. Jones, we can give you X amount of dollars without pulling the report. Or do you want us to pull you the report to give you more? Oh, no, we good. So we just got enough utilization being added to all of those cards to offset the care credit card to bring that utilization down.
Smart.
So that's another reason why you want to make your bill payments on time with your credit card.
No doubt.
There you go.
Yeah. Because they'll also sometimes just sneak it in there. I woke up one morning and one of my cards had doubled in limit, and I was just like, I don't remember asking for this.
Right. And you see, they'll do it automatically if you're, you know, consistent with your payments. You guys, we want to definitely make sure everybody understands with the cards that it's not just payment history. It is the utilization. It's the both. Right? Just paying $35 every month and that card is a $10,000 limit, but you at $9,558. That $35 ain't doing nothing. You got to pay more. So if you want to bring the score up, you got to get it down below the 30%, but continue making that, you know, on-time payment. And one of the things that I tell my clients to do is tell me what's that one thing you got to have every day. And usually it's Starbucks. Usually it's like Tim Hortons. Okay, do me a favor. Go pull up into Starbucks. Act like you about to order. Pull your phone out. Make a payment. So now you hijacked your brain. No, you didn't get a chance to get that Starbucks, but you just spent the money that should have been applied to that credit card. So every day, if you will go to Starbucks every day, spend that $5, $10, whatever it is you spending, put it on that card. Your stomach gonna thank you in the credit card too.
I think that's key. I think that's key in this conversation. Is habits. I think a lot of people have bad habits. And those bad habits end up leading us to poor credit. I know that was my personal biggest flaw was my habits was killing me. Like you said, eating out. You know what I mean? I used to always eat out, and I know how to cook, but instead I would go eat out. You know what I mean? Just wasting money or whatever vice I had. I used to smoke cigarettes. I used to smoke cigarettes a lot. So you know what I mean? That was just money wasted instead of. And then we, like you said, we were always complaining about what we don't have. It's like, no, you have it. You just spending it on other stuff that's not really benefiting you, and that's how most of us be losing our money or ended up in debt by how we use our money on our bad habits.
Right. No doubt. I definitely agree with that because that's something I had the same problem with doing what they call just buying things that I didn't need all the time. I had a bad habit with that when I was younger with CDs. I had a bad habit of that when I was maybe when I was taking the kids out for lunch or dinner all the time, when like you said, there's food at home. I should have been like my mom, like, we got McDonald's at home. Not every, you don't have to miss out all the time, but when it's just excessive, that kind of thing, like you said, just the bad habits, will definitely eat into your credit usage, as well as one thing that I always had a problem with, and I think that it was more just the availability of it was as soon as I got a card, or as soon as I got an increase, using it, thinking like, oh, you know what, now I can go get this toy that I wanted, or now I can go get these clothes that I wanted, or not, and not realizing that negative impact that would have on my credit overall, because I know I'm not about to pay that by the reporting date.
It's all habits. That's all it is. It's all habits, either way it go. And with that being said, I think that leads us to thinking about our children. Our children pick up our habits. So the quicker we change ours habits, if we can do it before they pick them up, they'll learn the positive things. So, your 17-year-olds, your 16-year-olds, your 18-year-olds, literally, you can help change their trajectory. They don't have to walk in the same footsteps that we did. We can go ahead and impart the wisdom and the knowledge financially. But see, that also goes back to us wanting to know it for ourselves so that we can give it to our kids. That's a lot of some of us are so hell bent on doing the things that we've been doing. It's been working all this time. Yeah, but the next generation is going to repeat the cycle, and they're going to walk in the same footsteps that you walked in. And we don't have to do that, where if we take a moment to not just think about ourselves and go a little bit further to learn more so that we can pass off more. So my son graduated from high school with a 682.
Wow.
But all I had to do was just put rent on the credit report. He ain't really pay rent, but we put rent on the report.
Right.
Took him from a 0. I couldn't even get into Credit Karma because there was nothing there. Put rent on there. Within 3 weeks, he was up to a 682. Then we put stuff on the report. Now, in his case, the money came back to me. All right. Money came back to me. Well, technically, there's a little account for him. He don't really know. Homeboy need a car, and I ain't even told him.
Nice.
So, but he got the score, and he got a little account where he can actually go do what he need to do. He turns 20 this October, so maybe I'll tell him. But, then we put him on a secure card, just so that, we could build that score. He really has no idea what he has, right? Because I ain't ready for him to mess up what I just built for him.
Right, exactly. That's what you call, building, generational wealth and equity and that mindset, when you start teaching them that early. And because like you said, because either you're going to teach them right, or you're going to lead them wrong.
Yeah.
I know my mother, God bless her, she just never really got the credit thing down pat when it came to keeping it going. But she always did things that I would see, and then it was like those bad habits, like you said, I saw them and I thought it was okay, or I didn't understand the impact that was having, because I would see her just still get credit, but not realizing it's at higher interest rates, or that it's at, not like you said with the car situation, not quite the car she wanted, or not quite the house she wanted. She didn't have to worry about her job, looking at her credit report, but I got to worry about mine, So that's huge to think about. Like you said, think about the kids, think about your family, and how they're utilizing credit, or how they're utilizing their or how they're managing their credit score.
Yeah, and see, even with you can actually cushion them if you per se. So take, for instance, for my son's credit card, technically he's the primary, I'm the AU for the card. I made myself the AU so that I could see what you're doing. And I didn't necessarily do that, but I also want to be able to guide him. We have to be a little bit more hands-on in this position. all the work that I did to get him there, I don't want him to make one wrong mistake. So I'm literally, kind of walking with him, making sure he understands what he has to do, how the statement reports, so he can look at those things. Because shoot, I could be gone tomorrow.
Yeah.
I need him to stand on his own 2 feet. I need him to be able to say, okay, my mama did leave me with this kind of, credit report and this credit score, and you got a little bank account over here, and you got a little, thanks to Marlon, a good little nice cushion coming to you if I'm gone. I'm working more day in the line. But I need him to be able to move accordingly if mama and daddy's gone.
Right.
So we can really help our children. But again, just think, if this had been about maybe 6 years ago, I wouldn't have been able to do none of this for him because I didn't have the knowledge.
And that's the exact thing I wanted to get to. It's like, I think we're at a time, when they say, better, you do better. You feel me? And we're in a day and time where ignorance can't be bliss. You feel me? Ignorance can't be an excuse because, we're in the information age, so everything is out there. I think the key thing and that we've been mentioning is habit. I brought up on a previous show on here a book that I read called The Power of Habit. And I think, like, he broke it down perfectly in there, like how we talk about generational curses is because we just do what we see. You feel me? What we're around, we're that reflection of it. So we just repeat without improving it, and without questioning. And sometimes we do it absent-mindedly. We don't even mean to do it. You feel me? It's just the way the brain works. The brain is going to always look for the easiest way out. You feel me? And the easiest way out is comfortability. And sometimes I think we got too comfortable in consumerism. Because I think that plays a big part in debt in our community and how we spend money is like we're consumers more than producers, so to speak. You know what I mean? And I think that consumer mindset is what holds it. I know that held me back for a long time. You know what I mean? But you always, like Willie mentioned earlier, as soon as I get some money in my pocket, I'm ready to go spend it. You know what I mean? That was always my mindset. I'm ready to go spend it. I ain't thinking about investing or buying property or none of that. You feel me? I was thinking about materialistic things and nonsense, so to speak. You know what I mean? So that's something I don't want to pass down to my daughter. You feel me? Like how
really powerful. Really powerful, because I can go back to something that Rose said. She talked about that credit is your name. And so what has happened, being taught as a consumer, we think the power is in the brand that we buy and not in our own credibility of our name. And so we're busy chasing after that as though that's what's going to give us the value, as opposed to understanding the value that we have. So Smooth, when you talk about habits, our life is just a sum total of the habits and choices that we've made. So then when we say, man, it's jacked up, well, it's because we just caught some stuff, but we didn't take the time to be taught stuff. That if you get taught something, then what can you do? You are empowered to make a different decision, which now means what's going to happen? You're going to make different choices, which is going to end up being a different kind of life of credibility, but it's going to be able to give you the ability to teach the next generation so they're not entangled in the exact same snares.
Right.
I mean, man.
Come on, I owe all y'all offerings.
Man, y'all in there. Y'all in there tonight.
Yeah.
I owe all y'all offerings. That's real. That's real. You know how many people choose not to buy homes because their parents didn't buy homes? Or you know how many people choose not to go to college because their parents didn't go to college?
Choose not to get married?
They choose not to get married because their parents. We literally teach our children according to what we've done, and we don't realize when we say, well, I don't need all that. Yes, you do. Your kid needs you too, right? I believe it's Claude Anderson who said to Black America that if we don't get reparations, we done. because we don't own enough in this country to have a voice. We need you to want to own land. So we need you to fix your credit so you can actually buy something, so you can own it. You know what I mean? You can't pass that job down. You can't pass a rental property down, but you can definitely pass down businesses. You can definitely pass down property that you actually own. And, one of the quickest ways to start building a legacy for your family is to buy a home.
Yes. Yes. Quick and easy, simple, right?
And it's cheaper.
Yes.
Yes.
It's cheaper to buy the home now than to rent. You know what I mean? So we have to elevate our thinking as it relates to our finances. But see, when you start talking about finances, I'm not doing what I do for me. I'm doing what I'm doing, not even for my kids, for my grandkids, my great grandkids. You get what I'm saying?
Right.
So when you get into the idea of building wealth, it's not in this generation that the wealth is going to affect. It's in the generations to come.
Yeah.
Right.
Okay.
Right.
So
You in there. You in there.
I love Henry Ford. Okay. Let's think about this for a second. The descendants of Henry Ford today could literally graduate from high school and retire.
Wow. Wow.
They work now, not because they have to, but to maintain the name of Ford.
Yeah.
It's a legacy that they're continuing. They ain't got to work. This man created an empire that they were born into. Every last one of us can do that.
Yes.
But we all got to elevate our mindset for it, to want to do that. But again, we also have to think about this for a second. He wasn't thinking about just him. He was thinking long ahead. Yeah. I'm a fan of Henry Ford, okay? And so that's the keys here. When we're talking about credit, I hear this all the time because in my consultation, my question is, what is it that you're trying to obtain? Oftentimes I hear nothing. I don't want to own nothing. I just want better credit, which is good. That's, that's a good reason to want it. But I'm hearing it from parents. So you don't want to own nothing. You got kids.
Wow.
No judgment, but I need you to understand what you're saying. I don't want to pass down nothing to my children. You see how that don't sound right?
Right, exactly. Don't even want to have a legacy.
That don't sound right. So we just, and like I said, you guys, I'm still growing. I'm still learning. I'm a student of finances. I'm a student on almost everything because I got 6 kids. I can't afford to stay still and not continue learning. I have to make sure, like I said, who's to say tomorrow is my last day? I got to make sure that whatever I know today, I've imparted to my children so they can stand on their own 2 feet, so that they can actually impart into the next generation. And the most important thing that I can impart is knowledge and the desire to get understanding and wisdom and to continue learning it in finances and every other aspect of their life.
No doubt. No doubt. Did you have a question, Smooth?
Nah, I just wanted to add on, like I said, like everybody kicking that knowledge, but I also wanted to add that we got to get used to sacrifice. That's one of the issues too that I noticed that was in my in my family. You know what I mean? The willingness to take that sacrifice, not only in just learning financial literacy, but actually applying it. Because those are 2 different things. Because you can have the knowledge, but now I mean the wisdom and the strength to follow through on that knowledge is a totally different thing. That's a totally different animal. And a lot of people can't follow through because they're not willing to make that sacrifice. They don't have a deficit. She has 6 kids. You feel me? Mine is my daughter, and I know my health. We talked about that. So I want to do whatever I can immediately. You feel me, to affect her. So I'm trying to speed the process up for me to be able to help her speed that process up for her. You know what I mean? Like you said, we ain't thinking about now. We're thinking about in the future, but that takes sacrifice. You feel me? And I'm gonna tell you, it ain't easy. You feel me? Because sometimes, like you said, we fall back into what's comfortable because it get hard to make that sacrifice sometimes. You feel me? To say no. You feel me? It get hard when your kid asking for something, you know you got a plan and you got to look them in the eye and be like, no. You feel me? And then you got to look at that face and not fold. You feel me? That's a sacrifice as a parent. You feel me? Because that can hit you in a certain spot. You know what I mean? To tell them no when they in need or in want. You feel me? And I know a lot of families. I know a lot of, like you said, a lot of us want to give our kids what we didn't have. You feel me? Instead of teaching them what we didn't know.
Yes.
You feel me? Because if we teach them what we didn't know, they can get what they think they want or what we think. It'll be on another level. You know what I mean? But it takes sacrifice. Definitely takes sacrifice.
Come on, Smooth.
Man,
that's that key word right there. Sacrifice. Short-term sacrifice bring long-term rewards. And we have to come to that understanding. Most of us, you are so on the money in doing this business. Most people don't want to make those sacrifices, but you just prolong. You prolong the place. I've never seen people actually maintain. They maintain where they hate being.
Yes.
We literally maintain it. We uphold and complain the whole time. When someone presents something, you have an opportunity to shift where you are, but it's gonna take sacrifice. Anytime you try to go to the next level, a sacrifice got to be made. Mm-hmm. Anytime you're trying to walk on a different realm, you got to make a sacrifice. Period. I don't care if it's spiritual or if it's natural. You're gonna make a sacrifice. Something got to be given up. Right. You got to be light to get to the top. You can't be heavy. So you are on the money. You got to make that. We got to learn to make sacrifices. We have to learn to tell ourselves no.
True that.
Mm-hmm.
There's nothing wrong with saying no to yourself.
Mm-hmm.
Yeah, before we go into the after show, Ro, can you explain to the people what your company does for them and how you can be of service?
Oh, sure. So what we do is we help people dispute the negative items from their credit report. That's obviously our flagship product. Our clients actually end up with 12 products. Like I said before, they get a will to living trust, the power of attorney over their estate, as well as their health. They do get a debt payoff system. They get a savings goal system so that if you're trying to go on vacation or you're paying off, you want to buy a house, you need down payment, closing costs, title insurance, homeowners insurance. And if you want new furniture, you need money for that too. Right. So you need to be saving. Right. You end up with a debt payoff system. Obviously, credit monitoring and identity theft are typical services that come with credit restoration. So that comes. But one of the major parts of buying a home for first-time home buyers is a budget. I know we don't like that word, so I'm gonna just call it budget for right now. Okay. All right. The budget empowers you to say what you want to eat, where you want to go, what you're going to drive, how much gas you can afford, right? Otherwise, your money is telling you what you can eat, where you can go, what kind of car you're going to drive, and what kind of gas you can afford. And usually it's not how you like it, right? The budget actually puts us in control and put parameters on our spending so that we can live the life that we want to live and live in the houses that we want to live. So that's one of the main problems. So it does us no good to help you fix your credit if we don't actually fix the issues that cause you to have issues with your credit. A lot of people are not just negligent or willy-nilly not paying bills. A lot of people have had certain circumstances hit them and they didn't have a plan in place. So our services is to help you now, like Smooth said, change your habits and start preparing for the unforeseen. COVID showed up and messed a whole lot of people up. Because we didn't have emergency funds. We didn't have our credit in order. We didn't have, just think about this. If you had your credit in order and you had a $15,000 credit card, you could have stayed afloat for a while.
Right.
Right.
That's what my job did. They used their $15 billion in credit to stay afloat.
See? So that's what in a nutshell, that's what we do. We help you. Obviously, if you need to add trade lines, we do have the rent. We do have the the credit card to add to, and I have some other things that I do outside of our company to, make sure we can beat the report up, so that we can, get you to where you need to go. But that, in a nutshell, that's literally what we do.
Wonderful, wonderful. Before we get into the after show. All right. Well, thank you again for all this wonderful information, getting us more financially literate, and the biggest things, the biggest takeaways I have from this too is thinking about, like you said, thinking about what Smooth said in the sacrificing, but then on top of that is the thinking about the future for our children in terms of how they're going to use their credit, how they're going to manage their debt, how they're going to manage their lifestyle going forward, and being able to make the right choices for them and their children, and so on and so forth. And also thinking about the strategies, like you said, keeping your utilization low, but also keeping your available resources, at a manageable level. So that way, when you do need, like you said, the care credit, that's a huge one. And a lot of people don't think about that, is that when you end up needing to have those medical bills, having those medical bills, how that can affect your credit, and things that don't affect it, that do, that kind of thing. So hopefully everybody was taking notes, but if you weren't, definitely watch the replay and get all that great knowledge in again. But definitely call Ro Jones, get all her help, her guidance, the great tips, and then let her help you develop a strategy for a consistent and successful management of your debt. So we're in the after show. So usually this is the time we talk about almost anything. I do want to keep it financial since we have our experts here. One thing I did want to bring up, which I think me and Marlon started talking about it earlier, and I wanted to talk about it a little bit more, is in terms of when we're talking about insurance, but also talking about just what was the word? The investments, and I think we were talking about different. What did you call them, Marlon? The levels of the house.
Oh yeah. So we talk about, if you imagine when you buy a house, there's a few things your house got. Most houses are built on a firm foundation. What is most homes built on? A basement. Mm-hmm. And the foundation of any financial house is life insurance. Mm-hmm. And you say, well, why? They actually, both Ro and Smooth, have already made the point, because the house needs to be built for the people that are going to be in the house, right? So if something happens and there's a lifestyle in place where two people are earning an income, if one person dies, what happens to that house?
Sometimes it crumbles.
Yeah, exactly, because there's an immediate change in the amount of income coming in, but the bills are already set. Because guess who's still going to call you? The mortgage company's still calling. Right. The car company's still calling. They might send a card. They may even send some flowers. But you know what they definitely still sending? Every 30 days, same time every single month, that bill's still showing up.
Right.
So that the absolute foundation of your house is always going to be life insurance. It is the fastest way to do what? Create an estate. It is the fastest way to create an estate. So if you want to do something for your children's children, give them a tool that'll give them some options so that they don't have to do some of the things that we didn't want to do. So you don't have to see the GoFundMe.
Right.
You don't, honestly, that is the worst possible time for the family to be selling dinners. Mm-hmm. That is the worst possible time. So the question I ask people is this: when I'm sitting down with a family, I usually ask them this question: God forbid something happens to you. Do you want to let your family live at a lower level, the same level, or a better level? What do you want to live at?
Definitely want to be better.
I haven't had anybody say worse. I haven't heard that yet.
Yeah.
Most time people say the same or better. And then so really the fastest answer to that is going to be life insurance. Now, in terms of what type and the amount, those would be, we would talk about something like that on a consultation, because there's really 3 types that are out there. But again, we'll talk about that. So then you say, okay, what is the next level? Okay, Ro got to it already. An emergency savings for your house. You should have, as a starting goal, somewhere between 3 to 6 months of living expenses. COVID happened in March. Okay. The surplus that the government was giving in unemployment stopped when? In June.
Yeah.
So if you didn't have 3 to 6 months, you were laid off and all that kind of stuff, people's situations have been in fact impacted negatively. COVID didn't cause it. COVID exposed it. It exposed it. So, okay. So think of, you got a basement. Life insurance is the basement. Your first floor, because that's where you spend the most of your time, is that emergency fund. Okay, so what's the next step up we need to think about? There's 2 problems that we got to solve. Either someone dies too early, we solve that with life insurance. But here go the second problem. You live too long. That's why you need investments. 2 problems everybody gonna run into. You die too early or you live too long. So you say, well, why is it that someone needs to have an investment? The reason you need to have an investment, if you know anything about what the bank does, here's what the bank tells you. Give us your money, put it in a savings account, and we'll give you chump change. Because what the bank gives you on the savings return, guess what? It's lower than the rate of inflation. Meaning, when you put your money in the savings account of the bank, you're losing money.
Right.
Because by the time you figure, oh man, I got this 3%, but wait a minute, inflation outpacing that. So you're never actually going to get ahead. If this is the bar, this is what's actually happening.
Right.
So that's why when you say, okay, when you go to Walmart and you say, well, man, wait a minute, how old is the greeter? You say, wait a minute, why is the person bagging the groceries like 65? What happened? They outlived their money.
Yep.
And the truth of the matter is, even the company, they don't want to take care of legacy costs. That's why they don't do pensions anymore.
Right.
The reason they don't do pensions is because they say, hey, you know what? Hey, I'm good. We don't want to take care of you for the rest of your life. We'll let you do it. We'll give you a 401k, and hopefully you get enough. Because most people don't even know what's enough.
Right.
Because retirement's not an age.
Right.
It's a dollar amount. It's not an age. So that's the next thing. So that's like the upstairs, right? Then the next step is starting to get the kiddies ready to go to college. That's the next floor. Oftentimes people kind of get it out of order. They want to start preparing for kids at college, but don't have an emergency fund, haven't started to plan for retirement, and don't have life insurance. No, you don't want, that's not the road to go. Oh man, I want to grow my money. I want to invest my money. I want to invest my money. The problem is if you invest money and you don't have those other things, guess what you're going to want to do? You're going to want to touch the money that's in the investment, and you get penalized for touching the money early unless it's in a product that lets you do it for certain reasons.
Right.
So that's why you want to say, build the house on a foundation. Here's one thing that every house has. It's got a roof, right? Every single house has a roof. So, and because everybody starts somewhere, even if you only got a basement and you only got a 1-floor house, even if it's a ranch style, even ranch style house got a roof. So you say, what's the roof? That's the will. Something happens to you. Yes, absolutely. Something happens to you. Who's going to take your kids to get doctor's appointments? Guess what? The doctor can't let you schedule that appointment if you ain't got power of attorney. They can't. Guess what? They also can't do. They can't go into your bank account.
Right.
Do you want things going into probate? Absolutely not. Do you want your wishes taken care of medically? So just like every single house has a roof, your financial house should have a roof, and the will is extraordinarily important. And people think they're expensive. People think they're complicated. They don't have to be.
Right. Right.
They don't have to be. And it's just one of those things that, like we've all kind of alluded to, we weren't used to it, hadn't been taught, so we shy away from it. But then if you go to other communities, they have it.
Just to your point, I mean, one thing that people always think is they don't need a will because they're not rich, or they don't need a will because they don't have an estate to give away.
Mm-hmm. Man, here go the sad part when people die. You ever notice when people die? You ever see when people do that mad dash to the person's house?
Mm-hmm. Yeah.
Listen, let's just be honest. Somebody died, boom, you get people go over there, you're like, oh man, they were celebrating. No, they weren't. No, they weren't. What was they over there doing? They over there, let me get this. It's time to go shopping. I always like that microwave. I always love that coat.
Yeah.
Man, and you know how many issues that causes in the family?
Yes.
How much strife that kind of stuff can cause in a family at the worst possible time.
Mm-hmm.
You don't have to be rich to have a will. A will is literally, here's my wishes if I'm not here. And so you can be actually the one, you can bring peace to the family as opposed to bring confusion because there was no order and planning.
Right. No doubt.
So that's your financial health. Yeah. What's up?
No, I was going to say that's a perfect point about the will, because it happened in my family. You know what I mean? My grandfather was he had died. He had got killed. So all the his brothers, aunts, uncles, everybody was just going, he ain't have a will. So they was just snatching stuff. You feel me? Meanwhile, my mother, because this happened back in the 80s. I was a baby. My mother was basically a baby. She was only 20. You know what I mean? I was about 3. You feel me? So, and my uncle, they didn't get nothing. You feel me? Because all the family was taking all his stuff. You feel me? And the only thing that they could salvage was my cousin, who was about my age. This was years later. We in junior high. Now, mind you, he died when I was 3. You feel me? He just so happened to be at one of my other family members' house and seen this gold bracelet that had my uncle's name engraved in it and all of that. Wow. So he just basically stole it from my great uncle, and brought it to school to me the next day and said, you know what I mean? This yours. You feel me? But without a will, my grandfather was he was a detective on the police force or whatever. You feel me? My mom and them, they ain't getting nothing.
Wow.
Nothing. You feel me? Nothing. You feel me? From nobody. You feel me? So and I know my grandfather wouldn't have wanted it that way. You feel me? And now, like that was my mother's father. My dad's father, he's still alive. My father died, but he always tell me, he'd be like, this house yours. This house yours. You feel me? But my aunt and them stay in that house at this point. You know what I mean? They run that house. That house theirs. You feel me? In my eyes, that house theirs. You feel me? So when he passed, you know what I mean? Knock on wood, no time soon. You feel me? I'm not ever gonna put up a fight and be like, you know what I mean? Well, y'all know he said that's mine. First of all, you ain't put it in the will. You feel me? I always telling you that if you gonna tell me it's mine, Papa, you gotta go get that in the will. You gotta put that in writing. You feel me? Until then, that's not. You know what I mean? You're not telling me nothing.
It can be a battle. Yeah.
Yeah, you're not telling me nothing. So I don't even accept it. But like you said, without a will, you will get, you know what I mean? The people you think going to get something or you leaving something for, without a will, there's no guarantee that they will ever touch anything. Anything.
Oh, that's so true. The other situation we don't think about is, God forbid something happens to you and you're in a medical condition and you cannot tell the doctors what kind of treatment you want or don't want.
Mm-hmm.
Man. And again, you one of the most difficult situations to be in is when you in the room and the doctor come in, who make the decision? And one person say, well, is there a treatment that could possibly save their life? Yeah. But another person say, man, we done. I don't like these. So in that situation, what do you do?
Right. Mm-hmm.
That's why you need these things. I mean, just to give you an idea of cost, we're able to do for somebody for $38. We're not talking $500.
Wow.
We're not talking
$38. I got a pair of shorts on right now that cost more than $38.
So when we think about things like that, it's just how much do we value and think about that, and that sacrifice, it leads to so much less stress emotionally, physically, financially. I'm telling you, family members fall out over that stuff.
No doubt.
Forever.
No doubt. No doubt. Yeah.
So, yeah, but
it's not really even a sacrifice. You know what I mean? I mean, let's think about this for a second. And that's one of the things that I think when it comes down to talking about a will or putting, a trust in place or power of attorneys in place, these are not sacrifices. These are necessities. We need these. You see what I'm saying? Because you got a decision here. Am I going to leave my family in peace or am I going to leave my family in chaos? Like you said, it's a choice. So you're going to either willfully leave. Listen, you're willfully leaving your family to chaotically put you to rest, or you're going to willfully choose to put your family at peace and they're already going to mourn your loss. You want them to mourn the loss of their home, the estate, everything, or you want them to mourn the loss of their relationships with their families and sisters and brothers because you didn't put your things in place for them to, actually bury you. So I think we have to shift our mindset when it comes to wills and trusts, that this is not a sacrifice. And no, it doesn't mean you dying tomorrow. And no, do we need to wait till we're 60 and 70 to put wills and trusts? Because again, tomorrow is not promised. The next second is not promised. And if you have children, you definitely need a will. I can tell you, 2018, I had what you call a thunderclap headache, knocked me unconscious, and I fell down my stairs. Okay. Ended up in the hospital for 3 days. Now, at the time that I was experiencing the headache came on just like that. I mean, within a second, I was down them stairs. I felt all the pressure raising up in my head, and I was standing at the balcony. If I had stayed where I was, I wouldn't even be here talking to y'all. I'm not no small chick. I would have hit that cobblestone and it would have been lights out. Okay. That's it. All right. But I had enough sense to recognize something is drastically wrong and I need to try and sit down. I tried, didn't happen. I went down them stairs, okay? But then that's when I realized I was laying up in the hospital and spinning. And I remember thinking like, dang, this could have went drastically wrong. And if I didn't have this stuff in place, they'd be fighting right now, trying to get it. You see what I'm saying? Right. So even I'm saying this because even I was lowballing the importance of having these documents. Even though I had them, I still wasn't quite because in my mind, I'm young, I'm good, I'm okay, and I'm in good health. Well, boom. I was singing 1,000 years, 15 minutes before falling down them stairs, watching Twilight. Right. And now I'm, within a matter of hours, I'm put on 6 different meds.
Wow.
So life can shift quickly. And we cannot afford to leave our families in shambles because, we're not thinking forward enough, or maybe we take it for granted that we got tomorrow. We take it for granted that, we are okay. Anything can happen. You can get in a car accident as soon as you walk about this house, get to the corner of your street and mangle. You see what I'm saying? But you didn't do what you're supposed to. So now your family got to do, like Marlon said, GoFundMe to put you to rest because there's no life insurance. Or maybe there is life insurance, but you haven't actually allocated who's going to get what. And we all know, just like Marlon said, people run literally. I've seen this happen so many times, or stories have been told to me from clients that, oh yeah, I don't talk to my sister no more because the parent is gone. Or I don't talk to my brother no more because the parent is gone and they ain't do with it. That's a burden that we can alleviate our children from by just doing what we got to do.
True that. True that. Shinlo, you show up at the last minute. What's going on, brother?
Of course I did. Sorry, long day working.
No doubt.
Long day working.
We
And
appreciate
and the best
bringing up the rear.
and you know the best advice I've always heard is if you don't have anything to add and sometimes you just need to learn, just listen. So I've been sitting back listening to you guys, you guys conversation, taking in those tidbits from Marlon, my brother. What's up? Welcome back, The King's Truth. And that lady in the corner, I don't recognize her. Is that a Carla?
That's Ro.
No,
Bro.
no, Ro. You look like Carla. I don't know why. Yeah, man. There's some good information. I got my insurance from Marlon. Signed me up. Great agent. Him and my sister. Insurance is good. You know, you never know when the untimely demise. You know, look for the future. Take care of your family. You know what I'm saying?
Mm-hmm.
And sometimes you might have to do some, some stuff too. Like when you're planning your own demise, maybe like, I plan on being cremated.
Oh, right.
That's cut costs.
Yeah.
You know.
That's huge too, because that's a lot of times something people forget about, or they're afraid to talk about it, or they don't want to talk about it, and it ends up, like you said, ends up in the hands of the children or the relatives or a bunch of folks who have their own input, and they may go the wrong route that you want. You know, you may have gotten life insurance, but your life insurance isn't paying for some big, huge funeral with gold foil caskets and horse and carriages pulling you down the road. You intended to be in an urn sitting up on the shelf, and your kids getting the rest of that. You know, so you
don't get me wrong. That's still gonna happen for me, but I'm gonna be cremated at the end. So
horse and carriage pulling the urn. Got you. I got you.
Yeah.
And rims. I remember that. I got you.
The casket is gonna have rims on it. It's spinning and it's spinning.
It's spinning. Yes. See, we won't know that without you putting it in the wheel. Thanks.
See?
That's what I'm talking about.
I hereby, let me write it down. Let me write this down. That's some good stuff.
Right. But that's real. That's real.
Just chime in one quick sec. So, okay, again, just only because it's life insurance awareness month, September, the average family, just to give you a number, is underinsured by somewhere between $300,000 to $400,000. They are underinsured. So we talked on the last show, just give you a number just to think about. It should be somewhere between 8 to 10 times your income. That's how much it should be. Wow. 8 to 10 times your income. Because you just alluded to with the spinners on the casket. People will go and have a small policy. They might have $15,000, which if you think about it, no, that's not even a year's worth of someone's salary. They'll put $10,000 in the ground, but still got a mortgage, still got car notes, that's why having the right amount is so important. That's why you have to have the conversation, because if you don't have the conversation, you know what ends up happening? You just take whatever they give you. You see the ad on TV, you go on Google, oh man, this looks like a great price, $24 a month. Yeah, that's got to be enough.
Yeah.
No. So, So if you want them rims and spinners, you got to have the right amount of coverage. You're going to put 50 grand in the ground, you got to have the right amount.
Right. True that. What was you about to say, Smooth?
Nah, I just wanted to piggyback off of what Queen Ro was talking about when she said, and the brother Marlon, when he was mentioning about having your wills. I had a friend, she actually going through some health issues, and one of the nurses was telling her, or doctors, was telling her, like, you know what I mean, you may want to think about making a will. And she was like, she was hesitant of thinking about it, you feel me? Because, I guess don't nobody want to deal with their mortality or what have you. You feel me? So I broke it down quite simple for her. I said, now, whatever your health issue, you may beat that health issue. You feel me? But tomorrow you might go outside and get hit by a car.
Yes.
You feel me? You know what I mean? So like you gotta think, like, you don't control tomorrow. None of us control time or what happens. You can't see the future. We can prepare for it. So, you know what I mean? All that doctor was telling you was be prepared. You know what I mean? Because you're gonna die one day anyway. You feel me? None of us live forever. You feel me? So if you're capable,
I'm planning on that.
you know what I mean? So if you're capable for preparing, to being able to prepare for that situation, do it. You know what I mean? Don't, you know what I mean, get all deep and think about the death and all that of it. Think about, you know what I mean, having your family secure. You know what I mean? Having your affairs in order. We all want to be remembered for having our affairs in order at the end of the day. I don't care who you are. You want to have your affairs in order.
True that.
Yeah, because people think talking about this type of stuff is depressing. No, it's being realistic. It's being an adult talking about real life things that, unfortunately, life and death go hand in hand within this world that we live in. You're going to have death. You might as well talk about it. Get the hard part out the way so you can enjoy peace of mind and not worrying about later on, like, when are we going to talk about this? How are we going to fix this? What am I going to do if something happens to me or you, or even one of our kids, or somebody, whoever's in the house with you? It's just a fact. It's just factual. Just get it out the way and enjoy the rest of your life until you have another life-changing event. I'm not having any more kids, so this will is going to be done as is. No, unless I have grandkids, then it's going to go further. Somebody's going to get my basketball card collection unless I sell it. I'm going to sell the Michael Jordan card. I'm going to sell the Michael Jordan card some way, some form or fashion. That's going to be my boat or yacht money, or that'll be my spinner money. Yeah, see?
It's spinner money, right?
See, when you start thinking, you start putting it out in the universe, you know what I mean?
All right. Well, before we get too late, going into another conversation or anything, once again, I want to thank everybody for joining us on the show. Once again, thank you, Marlon, for bringing your insurance and investment expertise. Thank you so much, Ro, for joining us. Hopefully, we'll have you both back on again, and we'll kick it again about another financial topic that'll keep the people financially literate and being successful in their journey. And as always, my brothers, Dame and Smooth, thank you for jumping back in. And just want to make sure that we go out. And of course, I'm always my promos. It's hard producing this show. Y'all gotta give me a second.
No.
Once again, always check us out every Monday, 10 p.m. Eastern on YouTube Live and Facebook Live. Always catch the replays on demand, audio replays on all the podcast platforms, including Spotify and Apple Podcasts, as well as on Facebook and YouTube for the live replays. Thank you. Get our merchandise over at teespring.com. I got on my Protect Our Boys, like we protect our girls. Smooth's got on what you got on there, Smooth? Oh, you got a legacy logo. Yeah. Oh no, that's the blue logo sweatshirt.
Yeah.
No doubt.
Yes.
That. And then we have masks, we have fanny packs, we have t-shirts, all kinds of things. Make sure y'all check that out. Make sure y'all check us out on the web, gftradioshow.com, or on your favorite social media sites at GFT Radio on Twitter, Instagram, as well as GFT _radio on Twitter and Instagram, GFT Radio on Facebook. Marlon, you want to give out your information, sir?
Sure. The best way to reach me, phone number 313-212-7042, or you can reach me right at the website. It is primerica.com/Marlon Johnson. You go there, you can schedule an appointment, schedule a complimentary financial needs analysis. Happy to sit down with you and your family over 30 minutes, really about an hour and a half. give you a plan for where you are, help you build your financial house. We love helping people. That's what we do all day long.
Hey, what's that 313 from?
313. It's right from the D.
Right.
You know
right.
it.
Ro, you want to get out your information, ma'am?
Yeah, I'm gonna go ahead and piggyback off. You need to call Marlon because it's affordable. It's affordable, and Marlon gonna take good care of you. Okay,
yes,
I'm his client. I love being his client. So, all right, shameless plug for Marlon.
We are clients too,
but
y'all know.
You can
just
right.
know.
You can find me on Instagram. I am Roshonda Jones. I am ROSHANDA JONES. You may call me or text me at 313-327-2770, or you can visit my website at RoshondaJones.com. I am on Facebook, and my name is Ro Jones, as you see it on this page. You can find me in those. I'm actually on LinkedIn too, but I don't really be in there like that. So send a message in the bottle, you know.
No doubt.
Yell my name. I hear it.
No doubt. And definitely, as always, to our queen, Sunny, shout out to her. She had something come up, so we held it down for her for the night. You can catch Sunny at IamSunny_D at IG, Snapchat, Twitter, and TikTok, or visit her at unreservedlyme.com. You know, get at her. She always has something great going on over there. Smooth, you want to go ahead and give out your information, sir? Actually, I think that some of that's wrong now, so I'll let you just speak.
Welcome back.
Y'all can catch, what's up? Y'all can catch me on Twitter at eTrentonGroomy. My website at kingstruth.com. I'm gonna have my business website set up soon with my notary and signing agent and everything. So I'm gonna get that to everybody shortly. You know what I mean? But I'm back, and I like to thank Queen Ro, King Marlon, for the information. You feel me? And to let me know that I'm on the right track. Just hearing how they talk, I know if I'm going in the right direction. So salute to them. Mad I couldn't be on the first time. Happy I made it here the second time. You know what I mean? So salute and respect.
No doubt, no doubt. And like always, check out the live replay. No doubt, no doubt.
Right.
Well, I am your host and your co-host, and I am at Willie Styles on IG, Twitter, and TikTok. I actually posted on Snapchat recently, so get at me at Willie.Styles on Snapchat. I actually posted a couple of times. I know I'm only known for stalking over there, but lately I've been trying to post a couple things. So definitely get at me at Snapchat over there. I know TikTok is actually trying to get changed or go away, so that's in limbo. We'll see how that works out. But you can always check me out at stylesradio.com for all the hot tracks that I'm listening to, for all the music, the photos, the artists, the things that I follow, or get at me at williestyles.info for all my links. This is GFT Radio Show. Thank you all again for joining, and have a good night. Take care of each other.
See you at 7.
Yep.
Good night, everyone. Thank you again, Willie and Marlon. And
hey guys, this is Girl Sunny D, 1/3 of the podcast GFT Radio Show.
What up, though? It's your boy Willie Styles from the GFT Radio Show. Just letting you know you can catch us every Monday night, 10 p.m. Eastern.
And to get some merch, I got some on right now. Go to teesprings.com/stores/GFT Radio.
Grown Folk Talk Radio. Join the conversation. Let's have some fun. Holla.